So we are finally seeing some great discounts on some stocks, but per the usual, it looks like us as retail investors might be buying some of the wrong stocks on this massive dip. Unfortunately, some bad habits are picking up once again. So let's take a look at what retail investors bought en masse last month and see exactly what we got right, what we got wrong, and more importantly, if the market kind of continues to kind of do its thing and kind of downtrend further, whether or not we see a crash or a correction or whatever we end up, obviously we're in a correction, but if it gets worse and turns itself into a crash, whatever the case is, the point being, sometimes retail gets these stocks wrong. And unfortunately, it looks like we may have gotten them wrong once again. But don't worry, we also got some stocks that were right as well, and we'll talk about those too. Just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today. All right, well, I'll link the video up here to where I discuss basically this entire correction scenario, what exactly I would do in it and everything else of that nature. You can check that out there if you want details on that. I don't really want to dive into that as much as I want to get into these stocks and kind of give you my opinion on them from a long-term buy and hold investor's perspective. That's kind of the viewpoint that I'm taking here, regardless of crash, correction, whatever. Irrelevant at this stage. A great stock is a great stock, regardless of whether it's at all-time highs or it's in a crash. And I'm viewing it from a long-term buy and hold investor's perspective. I'm not a trader. Might very well be an incredible trade on right there. I have no idea. I'm not sitting there charting it or anything else of that nature. I'm strictly looking at the fundamentals of the company, looking at valuation, and then seeing, is this stock a great stock and a buy or not? Or is it like a total disaster and we should be running from those particular stocks, which there's some on this list too that are that way. And also remember, these are not my stock picks, guys. These are the top 10 stocks that retail investors bought. Not me, not Luke. This is not Luke's top 10 list. You guys saw it. I put out a video a few weeks ago. The stocks that I'm looking to buy right now. Obviously, I've made some other videos this year about, stocks I'd want to buy over the next couple of years or the next 5 years or whatever the case is. I can't remember all the different ones that I did now that I'm on camera and I got to have it, recall it by memory. But nonetheless, these are not my picks in the end. I'm just simply giving you my take on these particular stocks. This is not how I would structure my top 10 or my most, top 10 buys or whatever the case was of that nature. So, I got it. You guys can blast me down in the comments for a lot of my mistakes, but in this case, this isn't my list, so you can't blast me for the list. All right, so stock number 10 is Disney. This is one that's kind of hung around in the top 10 for a long time now in regards to retail investors. And it's kind of a divisive stock. I know a lot of folks don't like it for a lot of different reasons we're not going to get into here. I personally own the stock. I bought it back in the 70s whenever they had that massive dip. I just thought it was too good of a company and just the fundamentals lined up. And although they have business problems, and that right there was the risk with the stock, is that they have business problems, that I just thought that was the valuation was just too cheap, and especially to put it in my dividend portfolio and kind of wait and see what happens. I didn't take out a big position. It's not nearly as big as the rest of the stocks in my dividend portfolio there. It's not as big as a lot of the stocks that are in there. However, it was worth the flyer on the small amount that, hey, if they manage to turn the ship around, they manage to fix those business problems, of which there are many, and it will take time. And I'm talking time in regards to years here. And remember, I don't need my dividend portfolio for a long time either. Hopefully never, but in the event that I do, I don't need it for a long time. So therefore, maybe Disney returns back to some form of prominence or at least better profitability, to where that stock's obviously it's worth a lot more than what I paid for it right now. And obviously, more importantly, that dividend yield will go up increasingly higher as the stock continues to move higher if they're able to turn around those business problems. So this one right here for me is a cautious pump it. Valuation is not terrible right now. We'll see exactly what happens as kind of everything shakes out. With this correction or whatever the case is, I have no idea where the stock is going to go in the short term there. So for me, this one's just one you got to understand extreme caution and understand that it is a turnaround play and they have business problems. This isn't, meta turnaround play. That one was easy. That was an easy turnaround. Everything about that was easy. Everything that Disney has to do is hard and it may not work out. So you got to understand that risk. So stock number 9 is Meta. I don't know why this stock can't get higher on the list, especially as we kind of look through the list and we see exactly which stocks are on here. It makes no sense to me. Meta's a great company. They're not even fully monetizing everything that they have across the board. The valuation isn't even terrible. It's actually kind of cheap right now in regards to valuation. Now, it's not like it was last year where we were able to buy it in the 400s, but that's okay. It doesn't have to be that cheap in order for it not to be a great stock for you to buy right now. So this one for me is absolutely a pump it. It's been a pump it for years upon years now, and it's just a great company. And more importantly, they have a great future ahead of them. That right there is key. I got a video coming out on them soon, or if I already released it, it'll be up there. But nonetheless, this is a great company. They print money, and it's definitely one that I want to own, and I do own in my portfolio. So anytime we get any sort of weakness in Meta, I'm absolutely out there buying that stock. So stock number 8 is Palantir. Glad that it's staying on the list there. Obviously, I kind of figured it would anyways because of the hype run that was into it and all the hype behind it. I read the comments, guys. When people are down there telling me, Luke, you're dumb, this stock's going to be 300 by the end of the year. I mean, somebody's out there pumping something, and unfortunately, retail falls for that narrative again and again and again. Now, long term, absolutely, I think we'll see $300. And the next year, no. Sorry. And if it is, I would be selling out my entire position at that stage because that is just, there's nothing that they can do to even remotely justify that valuation. Then you would be in that, you would actually be beyond Tesla 2021 type territory if it got to that level there. So again, ignore that sort of stuff. Understand it's a great company. And right now it is still overvalued. You guys can go check out my video on Palantir, exactly what my price target is. Now, remember, that's based upon my plan. I already have a full position plus bonus shares, plus bonus shares, plus bonus shares. So I don't need any more. That right there is where I have it. So with a stock like Palantir, especially after a run like that, I don't know why more people just simply don't use the DCA strategy. As a matter of fact, if you're not going to take time to learn evaluation, you're not going to do your due diligence on a stock, okay, at least just simply do a simple DCA and move on. If you feel it's a great company, if you believe in their future, then that right there is the easiest strategy to take. Yeah, it means you're buying high. It also means that you're buying shares whenever it's low as well. And you can kind of juice it with a little side pile of money or something of that nature to where whenever it gets down below fair value, or let's say Wall Street gets dumb again, which Wall Street gets dumb all the time, then you can kind of dip into that and buy extra shares on your DCA to kind of juice that bottom a little bit, as you're DCAing into the stock. Then you don't have to time anything. You don't have to worry about anything. It's the easiest and best strategy, especially for folks who aren't going to put in the time and the work to understand valuation. Now, if you want to actually beat statistically a valuation and you're serious about that and you want to be buying all those shares back in the $6 range, $7 range, $10, $15, even $20 last year, we're buying that sucker up instead of having to pay 80 or 100 or whatever the case was that some of you guys out there paid, and you're serious about that commitment, make sure you take advantage of the March Madness sale. Check out the pinned comment down there if you want to work directly with me on how to do exactly that. We'll talk more about it at the end, but it's the pinned comment down there for those of you guys that are serious and want to do it right now. All right, so stock number 7 is GameStop. I don't know, guys. This is all I got for you in regards to that one. I can't explain it. I have no idea what's going on. I don't know. I guess I needed to get on Wall Street Bets to kind of understand this a little bit. Maybe there's a trade there. Again, comment down below every time I ask for that. Nobody seems to be able to tell me what the heck's going on outside of just, I don't know, maybe the ultimate squeeze is coming again. I don't know. Maybe, the kitty guy is going to post a meme and therefore to the moon. I don't know. To me, this just isn't investing, and I don't understand why in mass we're buying a stock like that over a lot of the great stocks that are out there that are on a dip, or just more than Palantir, for example, more than Meta, for example. It just makes no sense to me, guys. Unfortunately, this is where we kind of get that bad reputation among Wall Street, that we're the dumb money, whatever the case is. I know that's not a lot of the folks on this channel. I know a lot of you guys avoided those disasters that were out there with these type stocks, but it's something I don't see it. I don't see a future in it outside of this crazy mega, Gucci, Gamma, whatever squeeze thing that I don't know, hasn't happened now for like 4 years. So outside of that, I don't see any point in owning the stock. So for me, absolutely a dump it. I have no clue what we're doing there. I don't know. That's all I got for you is a shoulder shrug because I can't explain it. All right. So number 6 is Microsoft. All right. So back to better stocks here. And don't worry, there's some bad ones still coming. So we're not out of the woods yet as retail investors here, but at least we're back to solid, great companies. Microsoft, great company, great fundamentals. Anybody who thinks Microsoft's going to be smaller in 5 years is just out of their minds. Microsoft is a great company with a great future there. The valuation is actually not that bad right now. So definitely something that obviously with this downturn here and, kind of the AI play kind of flipping, that could very well hurt Microsoft in the short term, which could, if you're, an investor looking for opportunity, it could very well mean a great opportunity in a great company. So for me, it's absolutely a pump it. I don't personally own Microsoft, but there's no doubt in my mind it is a great company. I can absolutely look at the fundamentals of the company and see, wow, it's a great company, great stock, pump it. Obviously, have a plan. If you need to DCA into it, whatever the case is. But hey, I got no complaints here. We're back on the right track with Microsoft. Number 5 is Amazon. Hey, I just bought some Amazon. I will continue to buy Amazon. I've been buying Amazon for a long, long time now. It is a great company, 100% on pump it. The valuation actually is not ridiculous right now. So I hope that all this, AI hype, and I know Amazon's not really tied up into that, but the point being the tech trade being over for now, especially with Amazon not being, highly, highly overvalued like a Palantir was, like some of our favorites were, to where they needed to cool off. Amazon didn't really need to cool off. It was kind of cheap already. So this is perfect. I love this setup here. I'm not going to wait, right? I'm not going to try to time anything. I just simply set my price target. And once it got down below my price target, started buying again because I love the valuation. And if they want to continue to get dumber, I will continue to add more shares of Amazon as they continue to get dumber. So this one, great job by us. I hope I see this one move up the list if the price continues to fall. That right there would be great for us as retail investors. It means we are running in the right direction behind a great company. So stock number 4 is Ford. Guys, right back to it again. You guys know my thoughts on Ford. Even if you don't like Tesla, I understand. But why the heck would we own Ford? It just makes no sense. Maybe there's a trade there. I haven't seen any evidence of any sort of super trade or anything like that. This is one that has consistently been on the list for years now, and it makes absolutely no sense to me. The vast majority of retail investors are wanting growth. And even if you want a dividend, why the heck are you going to Ford for that dividend? I mean, I don't know. This one just baffles me. I see no path to any sort of sustain massive profits. As a matter of fact, a lot of times they take on debt in order to just pay that dividend out because they don't have enough profits to actually pay the dividend that they owe. It's just a mess. There's albatrosses all over those financials. Just you don't have to take a deep dive on the financials. It's pretty evident right up front, but yet we continue to buy that stock more than Palantir, more than Meta, more than Amazon. I mean, these are the type things right here that just frustrate me when I'm trying to help folks, because it's just like, why are we doing Ford? Thankfully, in my group, it doesn't really get any sort of run at all. And obviously right here on this channel, I know a lot of you guys watching, but it still is frustrating me because I want all of us to do well. And I know that retail can thrive and succeed in the stock market, but it becomes really, really hard to do whenever we're buying stocks like Ford over Amazon and a lot of other companies like that. So for me, it's a complete dump it. I don't know what the heck we're doing there. So stock number 3 is Apple. All right, you guys know it's my favorite stock of all time. I love Apple, but the valuation is really stretched. And unfortunately, we probably aren't going to see a lot of growth this year in regards to Apple. We may not see a lot of growth next year. Now, we'll see what the new iPhone here in October comes out to be. That's kind of the big linchpin in regards to, do we get another iPhone super cycle, which of course will supercharge earnings. But for right now, it's trading rich. And again, here we are buying a stock at a very rich valuation. Now, thankfully, it's a great stock. It's not Ford. It's not, GameStop. But nonetheless, it's still trading really, really rich right now. And it's definitely something I personally, I want to add more shares. I'm always available to add more shares, but I can't justify this valuation at all in regards to Apple. So it's definitely a pump it for me, but you got to be cautious, understand where the valuation is with the stock, and understand kind of what the landscape looks like in regards to earnings for the next few quarters. I don't think there's something coming out of the blue to, basically juice that valuation and kind of give us a valuation reset, kind of like we're seeing with NVIDIA and a lot of other stocks like that are kind of seeing just massive, growth. And then of course, great guidance on the back end there. Not that Apple's guidance has been terrible, but we're not even comparing apples to apples there. If we're kind of, see what I just did right there? I wasn't even on purpose. When you're comparing apples and apples to Apple versus NVIDIA, we just haven't got that out of Apple in a few years now. This is one of the strengths of owning Apple, is that it has a massive institutional hold that they want to hold the stock thick or thin. Stocks are running, they want to buy Apple. Stocks are cratering, they're running to Apple for safety. Just kind of is what it is. That's what great stocks and great companies do, especially during uncertain times. So maybe that's the other reason why retail's been buying it up. It's just simply to be in that play during these uncertain times. I'm not sure, but for me, pump it. Just got to be cautious, understand that valuation piece. So stock number 2 is NVIDIA. Hey, this one makes sense. I mean, I don't know. I don't know what else NVIDIA can do. I know it's not going to last forever, but we talked about it last year. Is it going to continue on for another year? Yeah, I really think it was. And obviously here we are a year later and it's still continuing. They had great earnings, great guidance, and Wall Street just went, that's great, but not good enough. And then they decided to dump stock. I don't know, guys. You can't make up this stuff. Wall Street's dumb. But nonetheless, looks like we bought up a lot of it there, which is exactly what you do when a great company has that situation happen. That is how you invest wisely in the stock market. And it's great seeing this one right here at number 2. That right there is absolutely what I love to see as investors and as somebody out there trying to help us as retail investors. Man, although I don't own the stock personally because I don't understand the chip sector at all, so it makes no sense for me to own that stock. In regards to that, I can't own it confidently like I can other stocks. It's been a great company. And obviously this one for me is a pump it on any weakness, which of course we got weakness for no good reason. Good guidance, good earnings. Yeah, we're going to beat you down. So there we go. Great job, you guys out there. And stock number 1 is Tesla. All right, guys, here we are. It's probably the most controversial stock in the stock market. Definitely the most, hectic, herky-jerky, mega cap stock that has ever existed by a mile. There's nobody that moves close to Tesla. I mean, we were just at what, 480, and now we are, approaching down below 300. Who knows where we land in the end? I'm not sitting here trying to guess Tesla. I never have. I just simply use valuation as my guide to own Tesla, which doesn't seem to make anybody happy. It seems like the bears are like, how could you own Tesla? It's a terrible stock. It's going to 50. And then obviously the bulls are like, well, why did you buy at 120? Why aren't you buying at 400? You don't believe in Tesla and you don't understand FSD and blah, blah, blah. I don't know, guys. I can't make it up there. I just feel like it's a great company overall. I buy whenever the valuation is cheap, which unfortunately right now the valuation is not cheap. They did not have a good earnings call this past time around. It wasn't a disaster or anything else of that nature, but it wasn't all that great. And more importantly, they didn't give us that forward-looking guidance for the next year, which of course can be a red flag to some folks. Now we'll see if it was just, hey, we're holding off until we announce the next model and then we're going to give guidance based upon that model launch. Who knows? Trying to predict what Elon's going to do too is a big who knows as well. Obviously, I know there's a lot of things going on around all that sort of stuff. You guys know I don't go down those rabbit holes. I stick to the fundamentals in regards to what happens on earnings, and that's my take on the last earnings. Obviously, I made a video on it as well. May agree, may disagree, but clearly retail has been buying the stock en masse and they want to own the stock, and it's the number 1 stock this time around. Pump it, just got to be cautious, understand that valuation piece. And if you want to see my actual complete watch list, complete with price targets, you want to get serious about learning evaluation, you want to do that through free courses, free coaching, you want to be able to talk to me and be able to discuss that with me, make sure you take advantage of the March Madness sale that's going on right now where we do all that. All that is included, plus a lot more. Check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.